But we start off with the market rally today, and it was the Nasdaq really taking off, up about 2%, having its best day since January 30th. And look no further than the super tech stocks that were driving the rally. Apple and Facebook both breaking out following analyst upgrades. Apple up double digits for the year and outpacing the broader market. Nvidia surging after a $7 billion deal, sending all the semis soaring. So the market has been fighting to get back to the highs. Is it the tech stocks here to the rescue? Have they been the missing link so far in this rally, Tim?
Well, those are some impressive looking superheroes there. And if you want to look at Apple as being a culprit or the missing superhero, you can make that argument. You can make the same argument for Google. You can't make that argument for semis. And in fact, I would argue that tech has had a meaningful part of 2019. But no, it hasn't been some of the names. And in fact, Apple is interesting because, in fact, it's been so left out of the party, and because really, I think sentiment in terms of the analyst community, in terms of the investor community, is also very different. If you look at other parts of mega cap tech, and I would even look to some of the global tech players. I mean, Alibaba has outperformed the S&P by almost 20 percentage points. Meanwhile, the triple Qs, or the Nasdaq, has been flat to the S&P. So have they been missing, or are they defensive? Look, in a time when we're worried about earnings and the quality or the strength of earnings in a lower growth environment, big cap tech is the one place where I think you are defensive, and we've seen this at different times in this market.
Karen?
Well, I agree with that on a couple of fronts. So for me, Alphabet is biggest position. That I think is up maybe 13 or so, 14%.
But flat to the market,
year.
Right?
Ish, right. Not a big outperformer of the market. To me, I think that is where value and growth are still, even up 14. I think it's that and Facebook, which we all know have its idiosyncratic issues. If they get some sort of settlement, though, I think that would actually be a big positive. But for me, of all of them, I think that Alphabet is the most appealing, and I wouldn't be surprised if it is further run. Remember, it is off a good, 8% from its all-time high. So it still has a lot of room to catch up.
I think they're all no touch at this point.
All of them. All of big cap technology is no touch because you think the market's a no touch.
Exactly. So I think that it all hinges on the overall market. So if I think that the overall market is a no touch, you can't buy the horse that got you here. So I think we're all in the back of tech, and I do not believe the worst is over.
So I'm with you. I think the market is going to churn here a bit until we reprice this slower global growth. The market really hasn't really repriced the slow global growth and the slow economic growth in the U.S. So I actually get it why Facebook and Apple are up, right? Because those are the areas that you're going to get the growth. It's the only place you're going to get the growth. But that doesn't necessarily mean that the entire market has to rally or can rally here.
I have a question here.
Lots of questions.
Because some people at home might be thinking, I could have sworn that we were saying that BK was wearing a bull suit for a long time. And
No,
I have been.
Yeah,
but I would say for the last 2 weeks or so, I've been much more bearish.
But everything that got us nervous last week is not over this week. I think you had maybe an innocuous news day. You had a lot of things that were going right for the overall market. We had China falling off a cliff. We had the ECB saying there was no growth. And now we saw that sell-off, and this is just a rebound.
Well, look, go ahead, Karen.
Well, one thing about the ECB not having a lot or no growth is that has absolutely put the chill on the Fed. There's no question. I mean, so to me, that is a big put under the market with the Fed absolutely out of the picture.
But where is the strike price on that put?
Right. Is it out of the money put? Yeah, I think probably some, but I think you have trade deal, which is a call on the market.
So, and how much Fed do we have left in terms of a market rally? Because, patience is the word. It's a great Guns N' Roses song. It's also what we keep hearing about, what we need to be with the Fed. And look, these guys, to their credit, I don't think are flip-flopping. I think they've been pretty bearish for a long time. I think it's been very easy. Look, we're on the show on Friday. That was 10 straight days of cyclicality down. It was easy to be very bearish last week, okay? Look, the same market is in front of us. And you can make an argument today that technically you had every one of these major indices, NASDAQ back above the 200, S&P back above the 200, EEM back above the 200, oil with a nice solid rally today. So, you tell me. I just think it was positioning and sentiment was so bad.
I think that it was so positioned to the extreme on the negative. And let's just put it in perspective. It can't really be to the extreme because we had an incredible run right off of the December lows. But to Tim's point, the pessimism got so entrenched that we were due for this.
Okay, so let me ask you this. Let me ask you this then. I mean, for these particular technology stocks that really led the markets in today's session, there were very idiosyncratic reasons as to why they went higher. Apple got an upgrade over Bank of America. Facebook got an upgrade over Nomura. These were idiosyncratic stories today, which helped bring up mega cap tech stocks and in turn the overall market. So if we are to believe that positioning got us to a certain place in time, could positioning be the reason why it's time for these stocks to actually rally? Because sentiment may finally be turning on some of these stocks.
On those particular stocks, though. But that's it, right? You can still have this churn in the market.
Well, if it does turn on that, then it takes the market.
Let's say you get
six.
If it does
so
change,
go ahead and buy them. Knock yourself out. I mean, but I don't think that these stocks in and of themselves are saying the entire market is safe. You get a rally in oil, you get a stronger dollar, any multinational is going to get hit, but you could still see Apple go up because of the idiosyncratic reasons.
Well, look, I think if people are struggling to look for growth and on a relative value perspective, it's not difficult to go grab Apple and Alphabet, as Karen's talking about. The fact that the street is upgrading a bunch of names, I won't get the typical snarky response on thanks very much on Facebook after a 35% move off the bottom. Yeah. But what I will say is I don't think it's difficult to defend an upgrade here, especially in an environment. And again, I don't want to go through those reports because I didn't go through those two. But I will tell you that I think if you're looking for a place where big cap tech can overcome growth concerns, you just named two stocks that I think absolutely can do it.
But you originally, though, when you talk about positioning, it's not only just positioning among your portfolio members, it's also positioning on the street. When you see these names rally back aggressively, you can't just sit by idly and wait. You have to upgrade these names. There's a purpose that you serve
as a
sell-side analyst.
Okay.
So I think they're forced to do it. I think they're a little bit late.
You think so? You think Bank of America, after downgrading the stock on November 2nd, had to upgrade the stock on March 11th?
Well, why don't you just look at the chart, though? I think that he's looking at the chart, too, and saying, okay, we've seen this massive rally. Where am I on a lot of my different names? And a lot of times you're forced to make a decision. Not that he doesn't have true beliefs in it, but the charts dictated a lot of their actions.
All right. Well, then I would think that every single analyst on the street would have to upgrade a lot of their coverage universe based on this rally that we've seen off the bottom. Because
they have called Wall Street sheepsville. Once one goes, there's going to be a lot more.
Before the massive decline, right? And so you didn't capture a lot of that.
You didn't. But we also have seen this, and not to pick on analysts, but we have also seen it with strategists too, right?
Well, let's do that.
I mean, so no, but they're in a tough position, right? Because what it takes is their job is to analyze the company. It takes a long time to get through the procedures within a firm to change a rating. It's not just like they wake up and go, oh, I missed 35%. I better put a buy on it. There's a big process that goes in there.
It's a big process, and I don't mean to insult them, but the point is that when you're stuck on the screen, you don't get the luxury of seeing a timestamp on it. A lot of times they'll just say, where is XYZ Bank on Apple? And you go back and you look, oh, they're a neutral or they're a buy. So I think they want to self-correct a lot of the stuff.
Interestingly, on November 2nd, when that downgrade was put into place, Apple was actually higher than where it is right now. So this analyst, to that person's defense, did sort of stick with it. The downturn.
Yeah,
but the point is also strategists.
I think that's actually
it actually captured the sentiment.
It's not buying a stock after it's rallied. In fact, Apple's really underperformed. I think it's interesting to see analysts get out there and kind of reassess this whole dynamic about Apple's ability to grow shipments or a stagnant top line, the services business, you name it. Maybe just question it. What's the multiple for this stock? What's the multiple for the stock relative to the multiple of the overall market in an environment where the Fed is out of the picture and we weren't in a contracting multiple?
Because that has definitely changed from November.
That should change. That should change the multiple you put on the S&P.
Right, but if they do granular good work on this, what makes this company, what the fundamentals are, I don't think they could be responsible for how the market euphoria or
Sure. But when you look back on it, when I look back on a chart of Apple that's flattened out, and if I go back to January, it would have been important for me to hear that the fundamental story was a little more bullish from him in the starting days of January. And I'm not saying I don't want to make it about this one. I don't want to make it about this one.
I always have this discussion with Carter. Does it matter what the earnings do? The chart tells you something entirely different. And it's,
the chart usually has everything into that price. So the chart, the price knows everything. That's why they say price is truth. All I'm saying is that when Apple stock looks like it's flatlined for the last month and a half, it's an interesting spot where they want to upgrade the stock. My
bottom line question is, has sentiment turned on some of these individual stocks? For instance, in this upgrade of Apple, and I want to belabor this Apple upgrade, but part of it was, do these higher price foldable phones actually provide price support for Apple's higher model? So it's actually started climbing this wall of worry about these high price phones that had been a pain point for the Apple story. And Facebook, that analyst there said, hey, maybe regulation is actually a benefit, an advantage for these larger platforms like a Facebook as opposed to some of the smaller platforms. So again, putting this concern that had been an overhang on the stock into the positive category by seeing, the
right. And so it's a sentiment shift. It's one of those type of things. But I don't think that these idiosyncratic sentiment shifts, little changes in the marketplace, or maybe potentially big changes in the marketplace necessarily translate over to the rest of the market. I think we're talking about a couple names here that everybody's in. Don't get me wrong, that everybody looks at and says, okay, if those are rallying, things are good. But they also buy them when they want to get growth and there's no growth elsewhere. So now you have an analyst coming out and say, you know what? Something changed in these two stock stories. There's going to be some growth there that maybe you wouldn't get elsewhere.